Yes, are you tired of blowing account every now and then? Every amount your hard cashed money that you've earned in all the hard way that you've decided to earn, and then you've learned Forex, you've taken your money, you've decided now I want to go and learn something that is called Forex. But unfortunately, there's something happens to your money. Poof, it's gone. One, you didn't understand something called lot size. You didn't know about it. You just got in and blew your account. Another thing, maybe you understand, but you did not learn one topic that is very crucial for any beginner. And that is why I've chosen particularly this topic to be my first YouTube video, the longest one. And guess what it is? Risk management. Now, risk management is one topic that people have misunderstood and have left it out in Forex, and that is why we have more people losing money in Forex than profitable. Now, look at those people who are profitable in Forex. You will find it is a consistent way they have of earning this money. And if they lose, they don't lose big. They lose what they can recover. Now, today's topic is all about that we are going to talk about is about risk management, okay? Now, dive with me to the charts and let's learn about it, okay? Let's learn about risk management. And in risk management, there's one thing I want you to understand. This topic, a lot of people have a lot of things they say about it, but I'm going to do, how do I put this? I'm going to use minimum of your time so that you can understand what it's all about, risk management. Okay? Now, risk management, this is simply how you protect your trading capital. It's just like that. How you protect your trading capital. There's one rule I have in Forex, that the king in Forex is your capital. You have to protect them. You have to protect your capital. If you can't protect your capital, you will be in for it. Now, how do you do this? Now, this video is assuming that you know how to get into the market. You have done your analysis, you have done everything. The only thing that is left to do is just to get in, to put your entry and to set your stop loss and to set your take profits. And that is where the term risk management comes from. And it's all about risk to reward ratio. Now, let's go. Now, there is one thing I want you to understand. When you come, for example, in the charts, now, leave alone this. I have a class, a Forex class that I'm teaching. It's ongoing. If you are willing to join, you can come in. It's just $100. Just join. I think I'm the one who is charging the most minimum amount in trading. The first class I did, I charged them around $30. The second one, I'm charging around $100. So if you are willing to join, come in. Now, there's a student I was teaching about risk management, and that is why I said, let me do this, because the moment I taught, she's a lady, the moment I taught her about risk management, she was like, wow, I've never heard this anywhere before. Now, I'm going to teach you the same way, all right? Now, for example, I said earlier, assuming you've done your analysis, and I'm going to use this chart because I used it yesterday. Now, assuming you've done your analysis, okay? Now, for example, you have your entry levels. For example, you identified there was an order block around here. And then you can see now I'm using GBP USD. This is GBP USD. And then there's another order block you've seen, they could be around here. Okay? Now, depending on how you enter the market, today we are just concentrating about risk management. So, if you have a question, you can put it on the comment section. So, I will go through them and see what I can, with the next video I'm going to do. Now, you've analyzed your market and you have seen, I want to get into at this level. Okay, assume this, we will come back to this, so let that not distract you. And then you've decided, now, when the market comes around here, I want to enter a long position. You see? And then you want to take your profit maybe around there, and your stop loss below the order block. Of course, that is what people do. All right. And then you also have another entry that could happen. So if this one misses, you have this one. Okay. There's no, and this is the beauty. This is the beauty. Trust me. Actually, one thing I need you to understand, this is the beauty of having a risk management plan, a risk to reward ratio. You can enter market in different points. You can enter different, you can set up different entries and wait, because you know if that one entry gives you money, what you've lost will come back. And that is what we are going to learn in the charts today. So you've come in your chart and you've identified you have almost 3 places you want to enter the market. Where you have here, you have this one, and you have this one. Okay, so allow me to extend this. Let me consume a little bit of your time, and I promise you this will be rewarding. This will be rewarding. This is another level that you want to come and enter. You put your stop loss there and your take profit around there. Okay, you come again, you have this one, you want to take another long around here, of course, with your take profit around there, again stop loss around there. Now the moment you have such a setup, you have at least 3 probability. If the market obeys here, well and good. If it come here, well and good. If it come here, well and good. But remember, if you don't have a good entry, if you don't have a good risk to reward ratio, trust me, you will miss this. You will miss this. And most of the time it will pass you because you didn't know what to do. You didn't know what to do because you are not sure which part will the market obey. Okay, now the moment you see you have such a setup, and this is your stop loss, this is your stop loss where you around here, and this is your stop loss around here, and this is your stop loss around here, what do? This is what you do. Assuming you want to risk around $100. This is the amount you want to risk, only $100. The first thing you do, remember, you calculate your stop loss according your lot size. Sorry, you calculate your lot size according to the amount you have, or you are willing to risk. Assuming you want to risk $100 in this trade, in this one trade. So what do? You calculate your stop loss with your risk amount. And also, like I said, assuming you have something like let's say $100, sorry, $1,000 in your account. So this is your capital, this is your capitan. All right, so assuming you have $1,000 in your that is your capital, that is your starting capital, and you're willing to risk, for every trade you're willing to risk is $100. So these, I'm telling, these are how I do it. I look at the risk amount I'm willing to risk, and I calculate the lot size. I come and look at this distance, how many pips are this? And if, for example, according to my calculation, the distance between here and here, there's now the stop loss level. If the distance between that and that is, let's say, around $200, and maybe at 200, I'm going to use maybe a lot size of 1. Lot size at that point, it's around 1. That is the stop loss. That is the lot size. And when I look at the lot size, it's 1. If I risk 1, I use lot size of the size of lot size of 1. Around here, it's $200. So what do? I reduce my lot size. I don't increase my stop loss. If for every trade I've decided I'm going to increase, I'm going to lose $100, I will never increase my stop loss, my risk. I will only reduce my lot size. If I use one lot size, I will reduce it. So if, for example, like I said, from here to here, it's around 200 with a lot size of 1, what do? I reduce the lot size to around 0.5. So with this 0.5, I'm risking how much? $100. Now with the risks reward, now once I do that, remember I've just placed this. Now I look, what is the risk to reward ratio of this? Now risk to reward ratio of this, let me put another column here for risk to reward, RR. Risk to reward, you'll find for this one is 1:5.3. Okay, just bear with me. 1:5.3. I think I'm okay with that. Yes. Have you seen? I hope you are going. I hope you are going together. I have $1,000. I'm willing to risk $100. And if for every trade I'm willing to risk is $100. And for that $100 at this distance, if I use a lot size of 1, it's $200. So what do? I reduce my one lot size. I never increase my risk. So I reduce my lot size to 0.5. Once I reduce to 0.5, that means at this trade, I am willing to lose $100. And at a risk reward of 1.5, so that means my reward of this trade is going to be how much? How many dollars? 534. Are we together? So if this trade goes my way, this one, the first one, I'm going to receive 534. But if I am going to lose it, I'm going to lose $100. In the scenario that this refuses to go forward, the market moves now to the next level. I do the same. Remember, I only have $100. For example, I've lost this $100. I want to, with a capital of 1,000. The next one, I'm willing to lose again $100. I come again, I look from this level to this level, what are the pips? And with that, how many will I lose per lot size? So for example, if I use a lot size of 1 at this, maybe again, I'm going to lose around maybe $400. What do? I reduce. I don't risk. I reduce my lot size again. If this distance from here to here, I'm going to lose with one lot size of 1, I'm going to lose 400. I reduce my lot size. So I reduce my lot size to around again. Now my lot size will be 0.25. Are we together? Remember, I'm not increasing the amount I'm willing to lose. No, I'm reducing the lot size. So here I'm willing to lose again $100. Are we together? That's the amount I'm willing to lose at that moment. Now, what is the risk reward ratio of this? It's 7.22. Risk to reward is 7. Don't worry, I'm using 7.22. I'm using one hand to try and type and control the mouse, okay? So bear with me. Hey, what is this one? Now that is the risk to reward ratio. Now with that means how much am I going to get? Just be with me. I'm going to get around $722. Are we together? $722. Now, for the scenario, remember, maybe you've decided you're going to take 3 trades per day. Now, this is the second one. In the scenario that now that one is gone and I come here and I see now the distance between here and here, if I use the lot size of 1, I'm going to lose around maybe $50. Okay? Now what do I do? Remember, I want to lose, I'm willing to risk 100. What do? I increase my lot size. Now it will be, since here is 50, the distance between here and here is $50, and at the lot size of 1, so I want to lose 100, I times it by 2. So that means I'm going to use lot size of 2. And still, I'm going to risk also again 100. And risk to reward ratio, risk to reward ratio of this is 10.7. Risk to reward is 10.7. Okay? With that means if this trade goes through, I'm going to get around how much? Risking 100, that means I'm going to get around $1,007. Sorry, $1,007. Let me arrange this. It's good to have order. Now, I hope you're together now up to that point. And remember, all this is just because you are looking to minimize or to protect your capital. Like I always say, your capital is the king. Protect it at any cost. Protect it at any cost. So this is what you're going to do. Now, as you can see again, the moment we lost $100 here, we lost here, but since now this level, market comes and takes over and decides, the market decides now to rally, and the market shoots to our TP, to our take profit. That means we've lost 1, 2. Okay, this, for example, this trade was not a success. This was not a success. This also was not a success. Okay, but this one was a success. Are we together? This one was not a success. This one we lost the first trade. The second one we lost. The second one we got it. Now 100 plus 100 is $200. We've lost 200 so far. Now that means with our capital of 1,000, our balance is 800. Now with the third one, the gods of trade were with us, and we received a profit of 1,700. So how much will be in your account? Now, if you add the 800 that you are left with, it will be $1,807. Now, this is the profit that you will have had. Okay? Profit. This is your money now. This is the beauty. This is the beauty, guys. This is the beauty of having a good risk to reward ratio. This is the beauty, guys. This is the beauty of having risk to reward ratio. The beauty of it, that no matter what happens, you are still in profit. There is no way, if you're a good analyst in trading, that you just hit all the trades that you've been waiting for. No. But with a good risk to reward ratio, for every loss you take, you learn from it. The second one, the third one. The key point is always, as a trader, never leave your account without a stop loss. Every trade you put, make sure you have a stop loss, the amount you're willing to lose. If you're not ready to have stop loss in your account, trust me, hey, you will suffer. Now, this is the beauty of having stop loss, guys. The beauty of having a good stop loss. And I promise you, with this, once you learn how to do this, you'll be good. So, guys, don't forget to like, subscribe, and share. And also in the comment section, guys, make sure you tell me what you want us to do next. The next video that you'd like us to do. And as always, remember, poverty is the enemy. Poverty is the enemy. Join our classes, join our Signal group. Our Signal group at the moment, it's around 55, and let's, in the future, if you are watching this video past 2025, then the price could have hiked. But at the moment, Signal is 55, and also our classes that are ongoing, it is around $100. It was $30. I told you guys to come earlier, but now the price has gone to $100. You never know when it will go up again. So don't forget to subscribe. Goodbye, and poverty is the enemy. Thank you. I'm out.